Untitled of the Weekend Video Clip, and it's Saturday the 28th of May. I thought a bit of historical perspective might be useful today. This is a long-term chart of FTSE going back to 1984. I started trading, I think it was March 87, and the peak here was beautifully signposted by the Elliott wave theory, the charts in my book, The Way to Trade, and of course we saw the 87 crash, which was an interesting experience for somebody who'd been trading just a few months. Fast forward to 1999, 31st December 1999, in my view the most bullish day of the millennium. First looking back at the 1,000 years of progress, and second looking forward to the next 1,000 years. So no surprise that the sentiment on that day was at a maximum, and that it was all downhill for a few years afterwards. I think if you were to adjust this chart for inflation, that would actually be the peak. The all-time peak. I mean, that wasn't the peak anyway, but I mean these figures here 15 years later, you discount that for inflation, which I think is a relevant thing to do, you'd find that the peak was actually here. So you could say we've been in a bear market of sorts for 20 odd years now. I wrote a book, Financial Cataclysm Now, around here, foretelling this peak here. In fact, the book I wrote was really expecting the peak that I think we're seeing now, in fact. We haven't seen the sort of financial devastation I was expecting in that book, but I think we might be seeing it in the next few years. Because yet again, I think we're right at a point where we've seen a major peak and where markets are going to go down substantially. So I think I want to sort of put that in perspective. I think that we are at a major point in market history. And I mean, gold and silver have been around for longer than any equity markets, and I think they've clearly obviously stood the test of time, and I think they'll do very well going forward from here. I'm more worried about crypto. I mean, crypto is almost brand new in terms of these very long-term considerations, and there must be a big question mark about crypto, I think. I mean, are they just a bull market fad, as it were, and when things start to get tough, which I think they're going to now, will the crypto be okay? I mean, I think is a big consideration which we ought to address. It's a hard question to answer. I don't know, obviously, for sure. The future is not known to us. We can catch glimpses quite usefully, obviously. That's like my whole business, really. But on more fundamental questions, it's quite difficult. I mean, that's why we use stops, obviously, to protect ourselves against unexpected moves. Anyway, on that note, let's look at the more detailed markets. Just press pause. So looking at the chart of Bitcoin, clearly it has fallen quite a long way already, from 68,000 odd down to 26,000 odd down to here. So pretty significant change. It could still get down to 20,000, I think. I think that's possible. Let's have a look at the shorter term pattern. That's what's happening right now, and as we've been seeing, it's going through a decision period where it's just going sideways, possible sideways up, sideways drift. I mean, this is open to interpretation. I think we're liable to see that's an A and that's a B, then we're going to see a C, I think. So I would expect to see that. I mean, the E wave now is down there, I guess. No, sorry, there's a spike there, isn't there? I mean, this could be a low, but I mean, it's not very encouraging what's going on, really. It's about time we saw a low, I think. But there is this incision, possibly because of what I've been talking about. I mean, I think there's a realization that we are at a major turning point at the moment in the markets, and I think that does raise this question mark on crypto. There's really nothing to add to my previous discussions on this chart. It's we could see a thrust up. This could be a 1. This could be a 2. And we could start to see the thing take off from here. It's pretty close to 20,000. Got down to a low at 25,300 odd. So that's one possibility. It could just be a C wave, but I think we're likely to see some kind of bounce before we retest the lows at this point. Ethereum, a similar pattern. We've got the low here, A, B, possible C now coming in, I think. But again, the chart pattern is. I mean, this is more like an A, B, C, A wave, A, B, C, B wave, and get down a few more, like shorter term chart. Again, we've got Well, we had a 5 in fact, but of course that's now been taken out. The lows have been taken out, so it's really open on Ethereum. It's just drifting. So it really is not looking so great, really. And I think virtually anything is possible at this point. Let's look at the slightly longer term chart again. Yeah, so the low here has held. Sorry. So it's still an A, and the B may then go down to here. But this thing here is just not very impressive, to say the least. So it could quite easily retest and maybe fall through the low here. So it's just not very encouraging right now. Gold has a possible 5, 1, 2, 3, 4, 5. Rather small 4, 5 here, which maybe not ideal, but it counts fairly valid. A, B maybe, C wave decline, maybe down to the 50% level around 8.27. And at that point, I would expect to see some positives come in and some kind of a third wave thrust. But that seems fairly clear on gold. A little stronger, we've got the 1, 2, it's like a 1 of 3, 2 of 3, and now we're going up again. I mean, this is again a bit dithery. It's not crystal clear. There's actually a third wave. It needs to show some third wave characteristics, like a sharp thrust up, which is currently missing from the scenario. In fact, but if we start to rally from here, that would be a third of a third. That should be a little more dynamic, and should confirm that picture. So what I'm calling a fifth wave failure here. A, B, C for I think it's a big A wave. A, B, and the C is extended slightly up to here, but no confirmation that the peak is in yet. Move that to there and try and move this back down to there. Yeah. So there's no confirmation of a peak, but I'm counting it as an A, a B, and a C at the moment. But the C wave has yet to start up. Could this be impulsive? It's not impossible, I suppose. I mean, that is a pretty sharp move. Although so is that, in fact, but it looks like an A, B, C. 1, 2, 3, 4, 5, maybe 1, 2. It's possible. It's not. You can't write off the fact that this may be an impulsive rally. It just seems fairly unlikely given the current situation, but that's being a bit rather subjective, I think. So we need to see something more definite around this point here. The DAX is similar, really. I mean, saw a big peak. Well, peak there on 816,200. Very big ABC coming down. But a good rally, a 5-wave rally, suggesting it could be the start of something, followed by an ABC, in fact. So this could be a 1 and a 2, but this needs to show a bit more far than we're seeing at the moment. Let me go down a leg here. Right, so we had a possible 5 there, sharp ABC decline, possible B, and I'm looking for a C really. So the B obviously is now moved to up to here somewhere because it's gone higher. Again, it's possible we're going to go higher from here. It's possible that we might want to go above this peak. I mean, that's possible 5, I suppose. I mean, it looks like an ABC more clearly. A, B, C. I think it could be a 1, 2, 3, 4, 5 with an irregular ABC for 2. So possible 1, 2, 1, 2, 3. So this can continue. I mean, it's looking pretty solid. Then I need to revise that. But I'll leave this for the time being, and we'll look at it more carefully in the Tuesday report. Right, looking at the Dow since the low in March 2020 around 18,000. 1, 2, 3. Now I put this as a 4 here and a 5th wave failure, but it's not impossible. This is actually an A, B, C 4. And we're now going to see a 5th wave rally to new highs and then the final peak. If you did see that, I mean, it would be obviously be a positive, but it might be a very short-lived positive. I also think that there might be too much going on there. Let me just have a look at the go down a leg here to the So here's the peak I call 3. That seems a fairly solid call. Clear ABC, which could be 4. Then 5 waves up, 1, 2, 3, 4, 5. For a possible 5th wave failure. Quite an impulsive. I mean, I label that because we had 5 waves down here. That's a 1 and 2. But then this rally now is starting to question that really, because it was 1 and 2, and I was looking for a third of a third to come in, or we actually got this rally instead. So there was now the possibility that we could actually go a little bit higher. This is actually the 4th wave to there, and that we're going to go into a new high before the final peak, which would then be a significant peak. So it's the same. I mean, the key thing is we are peaking, or have peaked in some cases. I think we may have peaked in all these cases. These chart patterns are a little bit questionable right now. Let's have a look at the Nasdaq. This is pretty clear, really. We've got the 1, 2, 3, 4, 5 for 1, ABC on the 61-day for 2, then a very solid decline. Now we blipped up, but we haven't blipped up anywhere near the extent that the Dow has, for example. So I think this still counts clearly as a 3rd wave down. I mean, it could be an ABC, it could be an A, B, C, and it all depends on how this goes. I would think this is a corrective move, and it will end up falling away fairly soon. The other markets might do their own thing for a little bit longer, but I don't think the bull market, where it still is, as it were, is going to last much longer, even in those places. I thought I found it interesting and useful. I'm back with a report on Tuesday. Always feel free to send some questions if you have anything you like to ask me. It's always useful. Have a great weekend, and bye for now.